Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 17th July 2025. A parliamentary panel suggests reinstating a key deduction dealing with the deduction available for intercorporate dividends be restored in the Income Tax Bill 2025. This move offers relief to India Inc. by preventing double taxation on intercorporate dividends. The recommendation, part of over 285 accepted tweaks, aims to revive Section 80M. The revamped income tax law is expected to swiftly pass in the upcoming monsoon session of Parliament. Several private equity firms are vying for a stake in Tessolve. Hero Electronix is considering divesting a 30% share in the semiconductor company. The deal could value Tessolve at $450 million. Advent International, TPG Growth, and others are in the due diligence phase. Binding bids are expected soon. Jefferies is advising on the stake sale. The ICAI has recently released a set of FAQs on the guidance note for financial statements of non-corporate entities to support consistent application and better understanding of the requirements. In addition to those FAQs, this document compiles an expanded set of practical questions and answers, including key clarifications on disclosure, accounting standards, audit implications, and presentation formats. A comparative table with Schedule 3 is also included to help users understand how the guidance note differs from corporate reporting requirements. This serves as a practical reference for professionals dealing with non-corporate entities reporting from April 1, 2024 onwards. The job market has turned upbeat for gig workers ahead of the festive season, with over 216,000 seasonal jobs likely to be offered in the second half of 2025. The seasonal job openings in the second half of 2025 will be 15 to 20% higher than the corresponding period last year. The expected rise in demand for temporary workers is also forcing companies to advance their recruitment cycle to stay ahead of the demand and ensure operational readiness during the stronger than usual festive season this year. Fundraising through Qualified Institutional Placements or QIPs saw a revival in June after a tepid first 5 months of 2025 and is set for a robust second half as the market rebound has brought back favorable valuations and liquidity support for big ticket issuances by corporates. In the first 5 months of 2025, 13 firms raised Rs 15,408 crore through QIPs compared to 30 firms that raised Rs 29,518 crore in the same period in 2024. But in June 2025 alone, 7 companies raised Rs 14,085 crore. In June 2024, 7 companies had cumulatively raised Rs 3,009 crore through QIPs. State Bank of India, the country's largest lender, on Wednesday announced the launch of a share sale to institutional investors to raise Rs 25,000 crore. SBI further said the bank may offer a discount of not more than 5% on the floor price calculated for the QIP, while the issue price will be determined by the bank in consultation with the book-running lead managers.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.